Okay, thank you. So, okay, before we go on to the session with the apostle, we are going to talk about the dynamics of the stock exchange today for the next 30, 45 minutes, 1 hour, as as the Lord helps us. Praise the Lord. Okay. So, a lot has been happening regarding the Nigerian stock exchange. And when we talk about the stock exchange, we can substitute it for the market. So when you're listening to analysts, they may talk about the market. So when they are talking about the market, it's the same thing they are talking about. You hear somebody call stocks, you hear somebody call shares. It's still more or less the same thing that they are talking about. Okay, thank you. Thank you. It's still the same thing. Let me put, if that water is not being used, I want something to profit. Okay, no worry, I'll put my keys on top. So, it's the same thing that they are talking about. And the activities in that market have, please you pardon my little moving around at the beginning. When we are settled, I will not move around so much anymore. Let me just get my tools near me, just instead of moving around later. Okay, so a lot has happened of recent, and people have made a lot of money over the past 1-2 years. People have lost money maybe of recent, okay, because of market dynamics. Now, a lot of people on social media who are training and teaching people about the market. How many of us have come across them? Okay. So, what I noticed was that a lot of them do not dig into the basics. Many of them give you the superficial. But the risk you run is, if you follow them blindly, when the market dynamics change, if they have not talked about it, you might be left carrying, or you might go into a stock at the wrong time. So, for instance, like maybe a month ago or 2 months ago, the market was on the uprise. So people will say, the market has gained, this stock has gained this since the beginning of the year. This one has gained 300% since the beginning of the year. It is not about the right time to buy. Because all other things considered, which we talk about, if you buy at that point when it is peaking, the next movement will likely be a decline. Because a lot of markets are also cyclical. And we know that economies also are cyclical. So you want to buy when the thing is, this has come to the bottom of the circle, and then its likely direction is up. And then when it's very high, just before it starts dipping, and you hear news that it might start dipping, if you want to sell, you sell and take your profit. But the advice always is you should hold for the long term. Long term means longer than 5 years, up to 10 years, 15 years. Okay? And of course, you should be putting in monies gradually. Don't take all your investable money and go and buy one because everybody say that one he has done so well from January till now. It might be at the peak and might start. So if you go and put all your money, by the time it starts dipping, you now panic. Some people have heart attack because of that. Some people high blood pressure, Over the years, economies have witnessed market shifts that are very, very fundamental and of great magnitude globally within Nigeria. So if those shifts are going to occur, then the next thing you want to look at is what are the fundamentals of the stocks or shares that you are carrying. We should know, let's do the small basics. When you go to register a company, maybe you go and register it with Corporate Affairs Commission, right? When you register a company, because we are dealing with shares of companies on the Corporate Affairs Commission, CAC, that is where all companies are registered. Just like you have a you have a registry of deaths and births and marriages for human beings. Okay? That's where companies are registered in every country. So when you go to register your company, they will ask you, how much capital are you starting with? We know the idea of capital. How much money are you starting the business with? Sometimes they may ask you to deposit the money in a bank account so that they can see that the money is there. When you tell them the capital at your choice, whether it's 1 million, 2 million, 500,000, you are required to break it down into shares. That is, split it into units. That decision is also entirely yours. If you are in partnership with a group of people to form that company, the decision will be taken by majority of you that own the company. Okay? So, if you can decide, okay, we are starting this company with 100,000 naira. If we are starting it with 100,000 naira, we can decide we are only going to issue 100,000 shares. If you issue 100,000 shares, how much is the price for one share? 1 naira. Excellent. Sorry. So the price for one share is 1 naira. CAC will register it for you, right? Now, the exchange that we know and we call market is a structured place. And we structured, I call infrastructure, or things that, okay, that record, they have a setup where they record shares that are listed and all that. Until you go and put your shares in that market, which is public for people to buy and sell, your company is regarded as a what? As a private, it's a private company. You, the owners, decide anything you want. Okay? Now, the reason why do people now go to list on the exchange? Sometimes they anticipate growth, future growth, and they anticipate raising money from the public. 1. 2, they could also want the operations to be subject to rules, regulations, and standards. So if you go to the exchange, Nigerian Stock Exchange, the abbreviation is NGX. Okay? Now, this CAC is the one that registers companies and you send them your annual returns. There is also a regulatory body that monitors the exchange, the market, and also monitors all the players in the market. What is their name? Securities and Exchange Commission. SEC. Securities and Exchange Commission. They are the ones that decide what happens in the market, how you sell, how you buy, who is authorized to come and buy and sell. You know, if you want to take your company from private, when you go to NGS, your company now becomes what? Public. It means that these shares, these 100,000 shares, will be listed on the NGX for your company. Let's say your company is Company A. So the shares, 100,000 shares of Company A, will be listed on the exchange. When they are listed, it means that anybody in the public, whether Nigerian or foreigner, can come and buy and sell the shares. Of course, the people who are holding it now will decide to sell, otherwise nothing happens. Okay? At any point in time, the existing shareholders who must decide to sell before sales can happen. Okay? So if they put in the market, they know that our shares are now public. You can sell your own. You don't need anybody's permission. You can sell, you can buy more. You can even buy your partner. If he wants to sell, you can buy your partner out. He might not know. But there are rules for certain disclosures to ensure that there's no underhand kurukere dealing. Okay, so people take their shares public for a number of those reasons. If you take your shares public, it means that these people called SEC, you must satisfy them. These people called NGX, you must also satisfy them. Okay? Because now, the public are exposed to your risk as a company. So, because the public are exposed to your risk, you must audit your accounts every year. In some instances, you may decide to audit every 6 months. But every quarter, every 3 months, you must go and send them your accounts. whether audited or not, to NGX, to SEC. If you are a bank, Central Bank and NDIC must approve before you send to them. Okay? So that they can see transparency, they can see performance, the public can, and you must abide by certain rules and regulations. Okay? So, some companies may also decide that, look, we have been public, and we don't really need the wala of this being public anymore. We are going private. So they delist their shares and remain private. They remove them from the stock exchange, and they go back to being privately owned. Which means for you to buy their shares, you must go and look for the person who is a shareholder and ask him if he's going to sell. If he decides to sell, then you consummate the sale, you inform the company registrar. Now, every company that lists has a register of shareholders. That register is a list of all the shares and who owns them. All the shares and who owns them. So the register contains that. And there are some persons who are called registrars. They are the ones who are custodian of this register. Like we said, all these people, they are controlled by SEC. So if you bought shares, you don't have the certificate, you don't know how many, where they did bonus, you've not gotten dividend. This one, that one, that one, that one. 20 years ago, the one your father had, your grandfather had. All you need to do is, for that company, know who their registrars are, and you can go and meet them yourself, or you can go through the people who operate in the market, called stockbrokers. We've heard of them, right? So you can go through the stockbrokers. The stockbrokers just make the job easy for you. They may charge you small money, they may not charge you at all. So you go to the stockbrokers, they'll go to the registrars and sort you out. Or if you can get to the registrars on your own, you go to the registrars and sort you out. Everything that happens, whether you were aware or you were not aware, but legally it affects you, it must be recorded by the registrar. Which is why 20 years ago you bought shares, you forgot whether they gave you a certificate or not. Just go to the registrar. He will fish out. All you need to know is the name in which those shares were acquired. Okay? He will fish them out. Unclaimed dividends, he will fish them out. So all those monies of unclaimed dividends and the rest, who's sitting on them? Billions, hundreds of billions of naira. These people. That will soon reach 200 billion. It was less than 100 billion some years ago. Unclaimed dividends. I think I have some more inside myself. The other day, they sent me something for 15,000 naira, 14,000 naira. See, there should be more. Anyway, so these registrars keep records of everything. If the shares are listed, when you take them to the public, the word they use is those shares have been listed. So when you hear that a company's shares are listed, or they are going to list on the market, it means that they are going public. Now, when they go public, anybody can buy and sell. So, what are the dynamics? And of course, when you want to buy and sell, all of us public cannot go to the exchange and go and, file our purchases and transact. So we will go through these people called stockbrokers. Okay? You give the stockbrokers, or today now, a lot of stockbrokers even have online platforms. So you go to that platform, you place your order, you give them your money, or you put the account they are going to debit and make sure money is there. They execute your order in the market. When they execute your order in the market, they will debit you. When they execute your order and debit you, it might take a day or two or whatever. There is another platform run by the NGX that has everybody's account details for the shares, just like you have bank accounts. You have account details, Central Securities and Clearing System. So all those purchases and sales, when they are effected, they are recorded in your accounts. That's why they say you have CSCS account number, you have NHF account number and all that. So the shares you own with a stockbroker will have a definite CSCS account number for you. Okay? If there are some that there's no CSCS number, no stockbroker and the rest, you can appoint and mandate a stockbroker to bring all of them under their purview. and they will help you to trade. So when you buy or you sell, it is recorded in CSCS, and the register is updated for that company's shares. Somebody has sold, so his quantity will do what? Reduce. The one that bought on this register, his own quantity will increase. And the way you know is by checking with that stockbroker, checking your CSCS account. So if you gave him instructions to buy First Bank shares for you yesterday, if he has bought it and the thing has been moved into your CSCS account with them, if you check your CSCS account, when they tell you it has been moved, you will see the number, the amount that you have bought, and you will see the new total. You will even see the transactions, how much you bought, what was the price per share, and all that. Okay, so that we can have questions and answers. Now, we'll go to market dynamics. But before we go to market dynamics, I think we should talk about two things. Returns, which are dividends, and then returns, which are dividends, and then maybe analysis, right? Fine. So, the price at which shares are listed is initially determined by the board, okay? And not only determined by the board or let's say the shareholders, it will be approved by the, what's it called? Those people, SEC. It will be approved by SEC, and then you go to the exchange and go and list, okay? So if it's a first listing, they will call it initial public offer. IPO. So they did an IPO. That means the first listing on the market, initial public offer. Sometimes they say they are doing a rights issue. Rights mean those who have existing rights in the company, who are existing shareholders. So if they do a rights issue and you are an existing shareholder, it means that they are giving you an opportunity to buy more at a stated price. Okay? They need capital. They need to raise capital. They want the existing shareholders to benefit because there will likely be return on investment at the end of the day. So because they want those existing shareholders to benefit, they do a rights issue. Now, in doing all of this, initial public offer, rights issue, what's it called? Other public offers, etc., they will do what is called a prospectus. Thank you. A prospectus, a little bit better. Okay. So they will do what is called a prospectus. Now, when you have initial public offer, a rights issue, anything to do with the company, dealing with the public in shares, buy more, sell more, recall some and pay people back and all that, they will do what is called a prospectus. A prospectus is a summary of the company's affairs, including their financials, their last audited 3 years, 5 years at least. If they've been audited for 5 years, they will put at least 5 years financials in it. They might put details, they might put summary. At the minimum, they will put summary of financials. So you can see how the company has been performing. Any major risks, any major thing happening with the company, they must put it in that prospectus so that the public can see what they want to buy. So that existing shareholders, some might be living far away, they've not had time to bother themselves with what's going on. They might know if they want to. And then there are some people who play in the market, those stockbrokers, they also want to know what's going on with this company that is doing. You may also have financial analysts and advisors. Those advisors also need to know what has been going on in the company, what is going on now, what are their future prospects. So everything is put, the prospectus is thick. Most times it will be maybe 50, 100 pages, 100 and something pages. All the information you need is there. So they might likely put soft copies on websites and all. If you want hard copy, Remember that person called registrar, right? You remember that person called registrar? The registrar of the company's job is to make sure the prospectus, public accounts, and all that are available to the general public. So you can contact their registrar. If you want the hard copy, you can go there, go to their branch, pick it up, or they mail it to you, or they will likely put it online with technology. And you can go online and go and see, download it and see what's going on, whether you should buy or whether you should not buy. Okay? So, those are some of the things that they do, and those are some of the things that apply. Now, let's look at dynamics, and then we'll try and maybe wrap up. Many companies that list on the exchange, they have their strategies, they have their market share, they have a way they want to play in the market. So we should know, for example, that in telecoms, MTN's shares are listed on the exchange. Airtel shares are also listed on the exchange. Almost all the banks in Nigeria, almost all, not all, almost the big banks, they are all listed on the exchange. So if they are listed, from the initial price that they listed at, decided by the owners, now the market forces begin to play on those prices. That's where the market dynamics begin to come in. And some of those dynamics we might not be able to cover, some we can talk about. Why? Because things change every day. And when there are changes, market prices move with those changes. Okay? So, if MTN, okay, let me use Sterling Bank. How many of us are aware that Sterling Bank is doing a public offer right now? You're not aware. Okay. They are doing a public offer, which means they are issuing more capital, more shares to the public. As at some weeks ago, their shares were 8 naira per share. This public offer they are doing is at 7 naira. So, for me, I will want to look at what is the history. What has their performance been for the past 5 years or 3 years? So if I get a hold of their prospectus, I can see the financials, the financial ratios. The good thing is that the company will do the analysis for you in order to sell themselves to you. So they will say, our performance, turnover has increased by this, by this, by this. This was the reason. Our profit has increased by this, by this, by this percentage. This was the reason. Our management is young and vibrant. We have introduced new products. We have put our head office on solar. We are not spending much money on energy. We are doing this. We are supporting Agric. They will put their sales points in that prospectus to persuade you. So the prospectus is one of the first points of obtaining information. Then you also look at what they want to do going forward. If you buy their shares at 7 naira now, what price will you likely, what are their projections? What were their prices last year, 2 years ago, 3 years ago? Is their management, so I'm beginning to talk about some of the factors now. Is their management good? Past performance, projected future performance, management, public perception, market share. Do they have a niche where some people, and I don't know how many of us are aware, if you do transfers from your account in Sterling Bank, it's 0 charges. It's 0 charges. I'm doing a marketing job for them, right? Now the people, they pay me before, so no vex. But I'm using them as a case study. Okay? The same, what I'm saying now, I will apply to any other company on the exchange. And there's a daily listing. Okay, let me digress more. There's a daily listing of all the company's performance on the stock exchange in every country that has an exchange. So today is Saturday, right? There's no trading today. During public holidays in that country, there will be no trading. But the last trading ended when? Yesterday. So if you want to know what prices did every company's share close that listed on the exchange, how many of their shares were sold and bought, what was the closing price, what was the opening price, go to the exchange list, the listing from the Nigerian Stock Exchange. You will see all of them there. So sometimes when they are reading the news, they say the top 5 movers who had price increases. Those price increases and price decreases are determined by people who are buying and selling. If somebody comes and says, man, I need money, this thing is 7 naira, give me 5 naira, I will take. Then they will show that the lowest price was 5 naira. If somebody bought at 5 naira, then he might push the price down to 5 naira. You'll be wondering why, what happened. But likelihood is, if it is fair market price at 8 naira or 7 naira, you'll likely come up again. Because you might go the next day and say, let me go and buy a 5 naira. You might get there and nobody is selling at 5 naira. Everybody is selling at 750 or 850. It's a market, right? It's a market. So the strategy of the company to increase and gain more market share will also be stated and also influences price. Then the public perception or the market perception also, if people think the bank is not a strong jare, it's not this and that, there may not be a strong demand. And if there's no strong demand, the prices are not likely to keep rising. Because where there's a strong demand, they say the shares are on bid. Okay, more people want to buy than the people that want to sell. So they look at the prices, the highest price of the people that bought, and they use it as the closing price. If it's on offer, that means more people want to sell than more people want to buy. In which case, the price will depress compared to the previous day. So every day you can see the closing prices and the volumes that were traded for the company's shares. So things like that, competition, economic climate, government policies, innovation plays a role. If a bank has come up with an innovative product and people like it, then it's likely they will make more profits. If they make more profit, it means even at book value, their share price will go up. So things like innovation, things like development in other sectors who are competing. Okay? So banks have competition in Money Point, OPay, which other one? All those fintechs. PalmPay, PiggyVest, this one, that one. All those are competing with banks. If any of them comes up with a revolutionary product, they might take some shares away from. If any of them now goes to do an initial public offering, what do you think will happen? Anyone that is very popular, they do an IPO, people will rush the shares. Eh? People will rush the shares. So some of them are just waiting. And that's how some of the founders get extremely rich. They started their company with 100,000. It was listed at 1 naira per share. They kept it private. After 10 years, they've gotten market share nationally and internationally. Then one day they say they are doing an IPO. By then, the company has grown. The book value per share has now reached 50 naira. They now allocate or create shares, do all their work, get SEC approval, and go and dump 50 billion shares at 50 naira per share. The person who started with 10,000 shares at 1 naira, he might be entitled to 2 billion shares at 50 naira. Mark Zuckerberg, Jeff Bezos, what's Amazon? Elon Musk. All these companies that did IPOs, ride-hailing, Uber, and so many, NVIDIA, so many others. That's what those owners did. And they became billionaires. They operated Cisco, what's the other one? Zoom. They operated and they made sure that they got the market and their valuations were going up. And the day they feel that this thing is okay, let's list on the market. We are big enough to handle market wala. They go and list and propose a price. And if the SEC approves it, they sell at that price. And the initial people become extremely wealthy. Okay? Those are some of the things that happen that people make a lot of money. Yes, you have a question. Okay, you need it. Okay. Okay, so at this point, I think we can ask questions.
Yes, thank you very much. It's been very enlightening.
Please feel free to interrupt me and ask questions.
Yes, I would like to get explanation again about this last point about how founders list and become millionaires. I still don't quite get it.
Okay.
Yeah, so please.
Now I'll take you step by step.
Yeah, thank you.
Okay, fine. So they started with 100,000 naira, right? Or should we call it 1 million? Okay, let's call it 1 million. And they issued, this is the capital, eh? It is the capital that is being traded on the exchange. And they issued 1 million shares, right? But remember that they were private. Sashindi, you are following me? They were private, they were not on the exchange. They were private. Their capital started at 1 million naira. What will raise this capital to a higher value? One of the things that raises capital to a higher value is what? Who can guess? Profits. The profits belong to the shareholders, right? If you didn't put money, can you go and touch their profits? Profits. And the profits that boost up the share price are profits that are not paid out. In accounting terms, they are called retained. Retained earnings, retained profits, same thing. Eh? 6.5 a dozen. Same thing. The one that they pay out, what do they call them? From the profits, the one that they pay out are called what? If you take this one, they don't put them for your pocket. You don't go. It can no more be part of your capital. So let's say you operated for 5 years and your dividends were how much? For the 5 years. And every year you were making profits of 1 million. Eh? 5 years. Sachin, you are following? You are following? So how much profit have they made cumulatively in 5 years? Which their dividend was 0 for 5 years. So they started with 1 million. They have added 5 million. What is their total capital now? Yeah? Sachin, do you agree? Yeah? Now, they did not increase the number of shares. How many shares do they still have in issue? What is the new price per share after the books? Eh? So, some of you have heard me talk about book value of the shares per share. This is book value per share. Right? So, at the end of 5 years, they decide they want to do that thing that we call that time. They decide they want to do IPO. How much do you think they will sell the shares at the minimum? Sashindi. 6 naira per share. If the company thinks that we are on a path, we have a, we are dominating the market. In the next 5 years, we will bring in profit of 50 million. They can do, what do you call it now? They can do shakara and sell it at more than 6 naira per share. If the market believes or the public believes that they will achieve it, what do you think they will do? They will buy. However, whatever price they use, whether they use 10 naira per share or they use 6 naira or 7 naira 50, that guy that is going to approve, what's that his name again? They must present their prospectus, present their strong arguments, like the Bible says, and go and give SEC and tell why they want to issue it at 10 naira instead of 6 naira per share. If SEC approves, then they do the IPO at. So those people who started with 1 million shares, what has happened to their net worth? So now you're talking of companies who have been in the market for 10 years, 20 years, 15 years, who have done, this one is from 1 to 10. Some of them have done from 1 to 10,000, or 1 to 5,000, 1 to 50,000. There are some of these pages on Instagram, those wealth success codes. Yeah? If you follow one, it will pump up, you'll be seeing the others. You will see the stories of all these international tech companies and multinationals mistakes they made, what the founders did, all those things. They teach you a lot. So I'll suggest that we follow them. Now, one of the things that you cannot afford to be missing out on when you are investing your money. Yeah, IPOs are good, but I was talking about news. It is in the news that you will know what is going on. Right? If government did one policy that will kill one sector, if you are not in the news, you might not know, and you might be holding the shares, and then before you know it, the thing is, they want to sell, they'll tell you that. So, most times, on your phone, or your TV, or whatever, you can follow certain, and I think I've recommended some of them before. You can follow certain news, financial news, even the newspapers are online. And some stockbrokers also publish daily. Some stockbrokers publish daily. I'm trying to, Prudential, is it Financial Prudential? Something Prudential. Follow them, they give you daily. Cardinal Stone. These are stockbrokers. This is what they do. This analysis of what is going on in the market. What is going on from government, what is going on with competition. So they do the work for you. All you need to do is digest or go through what they have published. And you can get it online. Okay? Donald Trump says, I'm fighting China on tariffs. He says that Nippon Steel, they cannot operate in America because they are Japanese. We must protect America. Anybody who's holding any such stocks, let's say international investors, they are going to run immediately to those stockbroker people and those analysts. And you will see that some of the news stations are going to focus and interview some of those people. Because they'll say, so what does this hold for? So if you have premium subscription, if I do premium subscription, almost every day, I used to go and see what's happening on Bloomberg. I used to check CNBC, and then I check our darling Arise. Arise TV, Arise News, Abi? Is that not what they are called? Arise News. Arise News has three segments. There is a morning segment. I think they have an 11 o'clock segment. Business. All these things we are talking that is happening in Nigeria, happening all over the world, this one, that one, that one. They talk about them. Then they also have the same thing at 4 p.m., I think 4 to 5 p.m. Then they will do another one that updates and is a bit different at 7 p.m., 7 to 7:30 or 7 to 8. Okay? So, if you need to know what's going on, you need to be in the news. And then some I see online. On my, I think it's my Yahoo email. I follow, what's their name now? This day, Business Day newspaper. Business Day newspaper. So if I open my Yahoo mailbox on a daily basis, I'll be seeing what Business Day. And then my friend's senior brother used to also send to me Business Day on WhatsApp. So some of these news that you need, you will see them there. So that events don't take you by surprise. But, Sashindi, we've answered your question, right? Because if a company has operated 10 years and the price has now, book value has now moved to 10,000, the people who are the initial shareholders, they will make good profits. Any other?
Okay.
Yes, please.
For example, this company, if they are going public,
Yes.
can they increase the number of shares that they want to put out there, or they will still maintain this there?
No, they can increase. What Sterling Bank is doing as we speak is a public offer, which means they are increasing, they are issuing new shares.
Okay, so if initially I'm part of the people that own it privately, and I have maybe 1,000 shares.
1 million shares.
Okay,
You
out
have
of the
1
1
million
million
shares.
shares. Okay, no. And I have maybe 1,000 shares,
Okay.
and they increase it
Yes.
maybe to 10 million or 30 million shares.
Yes.
Am I still going to have, is my share this thing going to increase?
Your share, the number of shares you hold,
Yeah.
if you do not buy, if you didn't buy the public offer, the number of shares you hold will remain. Now, Remember, they bring in the public offer at a certain, they bring in the public offer at a certain price. Right now, Sterling Bank is doing it at 7 naira. I know somebody who bought like 3 weeks ago or 4 weeks ago, he bought at 8 naira. Now, when you go to the trade on the NGX, the Nigerian Stock Exchange, you will see what people have traded Sterling Bank shares. You can actually bring out your phone and check the closing price as of yesterday. 7 naira 40 kobo. It means that your 10 shares or 100 shares or 1,000 shares is valued at 7 naira. You understand? If you now apply and buy from the new public offer, that means you are buying more shares. The other question I thought you were going to ask was the ratios of shares that you had before. Maybe you had 5% of the shares of Sterling Bank. They now do public offer and double the number of shares in the... It means that your shareholding has been diluted. If they double the number of shares in issue, where you had 5% before, it means you now have 2.5%. You now have 2.5%. If you want to maintain your 5%, then you quickly apply to buy and double the... Yeah? You quickly buy and double the holding so that you still maintain your... So those were the things that were happening between Femi Otedola and First Bank.
So let me ask, can't the company management, in trying to have an IPO, can they assign shares to themselves before going public?
Public. No, you are not allowed to do that.
So they must go and buy like anybody else.
There are rules for insider trading, no? Because if you do insider trading in a way that is, you may have an advantage over others, which is not allowed in any market. Any market that has ethics and rules and regulations. There are rules and regulations clearly stated for insider trading. You understand? You understand? You will have the knowledge. You have the knowledge. But if your trade raises red flag, because you will declare that you are staff or you are director or shareholder. If it raises red flag and goes against the rules of insider trading, they will penalize you. And you might not even get those shares additionally that you bought. They may take them away from you and give you back your money. Yes, sir.
What then now is the role of looking at the company books? So, case in point, yes, Sterling Bank, we are using Sterling Bank. Sterling Bank is doing well financially. So we then say a season whereby Sterling Bank, case in point, we had MTN as at, I think, last year or so.
Yes.
They did not profit at all.
Yeah, there was that they made losses now, heavy losses.
Heavy losses.
2 years back, 3 years back.
Yeah, back to back.
Back to back, heavy losses.
Yes.
Their shareholders' funds was negative.
So that means there was no dividend paid to the shareholders.
When there's loss, there's no dividend now. Okay. Now, some companies might hold reserves. And under the rules, they may be allowed to pay dividends from reserves, even when they are making losses. But like I said, there are 1,000,001 rules and regulations that SEC keeps. And whatever you are doing, at the point of decision that will impact dividends, share price, public issues, shares in issue, blah, 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 you must go to SEC and go and get approval. And if you are a bank, you will go to CBN and NDIC before you go to SEC. You understand? So, now, those times when MTN was making losses, other multinationals were also making losses. Guinness, Nigerian Breweries, Airtel, MTN, who again? There are plenty of them. Nestle, Unilever, Cadbury, UAC, Cement, name them. All of them were carrying losses. And their share price dipped. In fact, their shareholders' funds were negative. If you had some money, what will you do? Should you sell or buy their shares? Buy, because it can only go where? Up. It's not likely to go down, because we know what caused them to have negatives. Because of exchange rate, Naira devaluation. So by the time they cope with that, in the next 1 or 2 years, they will recover and they will start making profit. So those were the times when it was very good to buy, because if we look at the prospects, the future prospects of an MTN, you likely have it going up. So those are some of the fundamentals that if you talk to your stockbroker, you look at the news, you talk to analysts. A good analyst will tell you, if you have some money, bros, come and buy you. Yes, please.
Last question, please.
Man, no problem. As long as we have time.
What's the business case for a company begins with a million shares and they want to go public? In what scenario will they create more shares? And in what scenario will they retain those shares?
And maybe just do a rights
Do a
issue.
yes.
Well, there are several factors which they say in my language that now person wait there on that tree. Now I know waiting breeze they do the tree. In other words, it is the company itself and the directors and the shareholders that they know the reason why they want to take those actions. Some of them could be that we need more capital. And we've maybe talked to a few of the majority shareholders, or we've looked at the market and the market is dry. There are no funds like that. So let us go to the public. Like I said, it's not just that they wake up today, decide, and they do it tomorrow. That process can take 6 months. At the minimum, that process will take 3 months. Because among the things you will do, you will file for court approval. I'll get to you. You will file for court approval, court-ordered meeting. You will hold meetings with your directors and your shareholders. You will publicize that meeting. You will prepare prospectus. And you will tell the public why you want to issue more shares. You understand? There must be underlying fundamental reasons, genuine reasons. Otherwise, SEC will not even approve for you. Your shareholders will look at you and say, what's going on? Maybe we should change you. Let's sack you and bring another management. So what some of them do, if as a company, PLC, you have like 5 or 6 key shareholders who together they own more than 50%. Sometimes they go and talk to them. They go and sit down with them and sound them out. Because if those guys vote and block you, end of story. If they approve and they agree with you, even if the other millions of shareholders whose holding totals less than 40%, even if they don't agree, these 5 or 6 people, their vote will carry the day. The only thing you must not do something that will hurt those other minority shareholders. So when you do all that, your directors and your shareholders must agree. Then you go to SEC, Securities and Exchange Commission, and go and justify why you want to issue more shares to the public. Sometimes it's easier to issue to the existing. So you do a rights issue to existing shareholders. In fact, sometimes companies buy back their shares. Say you are holding 20 shares. Sashindi, give us 5 back. We'll pay you. In fact, if the share price was 1 naira, we'll pay you 3 naira per share. Give us your shares. They'll buy back your shares. Cancel it from the register and give you cash. That's what Apple was doing for some years after Steve Jobs died. And people are saying the thing is biting them now because innovation. Anyway, that one is all those places you see them on Instagram. So who asked the question? Shane, you have answered your question, right? So the shareholders must approve, the directors must approve, and SEC must approve your line of action, whatever line of action you want to take. Before we come to you, let's take.
So now we have recapitalization.
Yes.
For the banks.
Yes.
And currently we have about 6 banks that have actually 6 or 7 that have actually scaled
you can call it 7.
Scaled.
Because the person who published it didn't add one more. I told the person now, well, somebody who I saw publish it, I told the person that you forgot one that have been making noise, but they are small, so people didn't see their noise. Anyway, okay, so we have 7 banks that have met the requirement.
So what happens if, because definitely there's always a sanction if you can't meet up that recapitalization, and you fall among the banks that did not meet up the capitalization, what then happens to your share? That's 1. 2, the bank meets up the recapitalization goal, and you have a share. Does that mean that your valuation goes up?
Well, I don't know if I will need help at this point. Come on, let me wipe. Just wipe this clean. So, your first question was, what happens if you do not meet up? A number of things can happen. They can take away your license and shut you down. That's probable, but the wala involved, it will be too much. right? Especially if you're a big bank.
It's not the bank, the shares of the shareholder.
And when they shut it down, your shares go to zero now. Your shares are cancelled in the market. If you are shut down, liquidated, your shares go to zero as a shareholder. But what will likely happen, which we have seen in Nigeria a lot, is that you do a merger with, or you're acquired by somebody else that has big pockets. Okay? So what will happen is, your own shares, for every 10 shares you have, they might give you 6 shares in the new and bigger, the new and bigger combined entity. Now, anytime you do what they will likely call shares reorganization, what you're doing, you are reorganizing. So likely do a weighted average. Anybody who don't like mathematics before, just listen. It's not difficult to. It's not difficult. So you are holding ABC Bank shares, right? You had 1 million shares. And the price was 5 naira per share, right? It's my 5 naira, don't become. So let's say it was 5 naira. Let's say it was 5 naira. So your money is 5 million, right? And you couldn't meet up your capital. And you now went to merge with XYZ Bank. XYZ Bank now issues you, let's call it 500,000 shares. If the capital base, they've not raised any new capital, they just combined. This, your 5 million, has not lost value. But the number of shares you are holding now is smaller. It's half because of the combination. So what should your share price now be? What should your share price be? Just double it now. 10 naira per share times this, it gives you your 5 million. You still have your 5 million. After that merger, this bank will disappear. This is the new bank that will exist. And this is what will still happen to your shares. This is a simple example. Do you understand? Do you understand? Don't worry your head about the calculations behind. There are actuarians, or what do you call those people? Specialists in valuation and all those things. They will do a whole lot of work before they arrive at this. That exercise can take months or a couple of years. But because nothing has happened to your, if they believe that your share was overvalued and they issue new one, they can issue new one at a lower value, in which case your 5 million can drop. But remember, like I said, all these happenings are not just decided and put on the public or in the market. You are talking of banks now. I said you go to who? CBN, you go to NDIC. 2 of them was approved. When you finish from them, you go to those people. You go to SEC. SEC, they will do and review everything that has gone on. And they will approve what you are going to do. So in some instances, your share price might remain. In some instances, if this bank has a very good market reputation, and they issue you 500 shares at 10 naira, by next month or 6 months' time, the shares can go to 12 naira. That is your gain. If the market looks at you otherwise, your share price might go to 8 naira. So instead of 5 million, your money now becomes 4 million. Anything can happen, but it's going to happen. Sokwechi? Whatever is going to happen, there will be a logical basis for whatever is going to happen. Okay? You understand? If you are running a bank that is almost running to the ground, they might value your shares anyhow. And tell you that your book value was too high. They can tell you your book value was too high, so they will do a new valuation. If you want, we'll take over and issue shares at the new book valuation. Of course, it will go through shareholders, directors, go through CBN, NDIC, go through SEC before the exercise is approved. That is those scenarios where somebody does not meet capital. Anything can happen. Some will say, okay, let's meet this capital by issuing more shares. We believe that whatever we're going through, we can turn around. So they issue more shares, they dilute your percentage holding, but they bring in more money, and they continue running. If you double the shares and you have not doubled the book value, then the price will reduce by half. If you have 10 million shares in issue at 1 naira, you now do, is it 20 million shares? If you've not done this thing, if the book value has not been retained, then they will likely, okay, sorry, it doesn't apply. Where it applies is bonus shares, sorry. The thing was not sounding okay in my mouth. It applies to bonus shares. That's where they dash you. And this happens. The company has made a lot of money. It's in retained profits. Let us give our shareholders. So they take it from retained profits to capital. So if you had 1 million shares before at 1 naira, and they dash you another 1 million, you have not brought in any money. They just moved it from retained profits to shares. Now you now have 2 million. If it was at 1 naira before, because they dash you additional, the price must drop to half, so that your naira will remain the same and the books are not distorted. You just reclassified it from one place to the other. So you cannot maintain the same price when you have doubled it. So that at the end of the day, the balance sheet with your shareholders' funds, capital will still remain the same. What you did is just dash people in shares in which you pay them dividend. Yes, please.
Thank you. My question first, my first question is, where this book value amount, where can we find it? Or we have to calculate it by ourselves every time you're checking?
Some analysts may do the calculation and put it, or the company itself may do the calculation, but if we do some practical, we can calculate 1 or 2 right now. Who wants to help us check the internet for a company's financials? Yeah, it's one of those things that I wanted to talk about before we wrap up. Okay, no, we'll talk about dividends and dividend yield, then we'll wrap up. And then, I don't know if, we can do the pepper soup break and all that. Okay, so let me just answer this one question, right? Yeah, then we chop, and then shareholders have approved. We should do pepper soup break. Okay, fine. So the book value is simply taking the capital of the bank, or in most accounts, you will see it called shareholders. Most times in accounting, it's called shareholders' funds. What other name do they call it? Sometimes they call it equity. They might say equity attributable to ordinary shareholders. They are all the same thing. So if you go to a company's financial, who will help us check for a particular company what their shareholders' funds are right now? You will also check the number of shares they have issued. So you divide it by number of shares in issue. What do we mean by number of shares in issue? Because sometimes the company may get approval for certain shares they have not issued. The ones they have issued is the one they've collected money from the public for. Do you understand? They've given the public and they've collected money. So those are the ones out there. Those are the ones that can be traded. So if you want to know the book value, you take the company's. Now these shareholders' funds might include the initial capital. And what do they call that other one again? Retained retained profits. They might also put some money aside, which they might call reserves, for something else in future. All those monies belong to the shareholders, right? So over the years, this thing can keep increasing if they are not paying. What can deplete it? These profits and the rest, what can deplete it? Yeah? Dividend payments and losses. Let's forget losses for now. Dividend payments. Because if you don't leave the money in retained earnings, if you don't leave it in retained profits or retained earnings, you are paying it out as dividend. When you pay it out, it has gone. Otilo. It has gone. So it cannot be part of your capital anymore. You understand? If you started with 1 million naira, over 5 years, you didn't pay dividend. You built 5 million in profits. What did I say you started with? Was it 5 or 1? 1. So over the years, you built 5 million. 1 plus 5 is now 6 million. So your shareholders' funds is now 6 million. However, if you pay dividends of 1 million out of it, your shareholder funds will drop to what? 5 million. Because that 1 million, you give me people, shareholders to go and spend. Okay? So if you take the total, after adding all these figures, you see a total somewhere. You pick that total, then you go and check how many shares they have issued. There might be initial public offering. There might be other public offering. There might be other rights issue over the years. You will add all of them together. Because anytime they issue those shares, money comes, that money goes where? It goes here into capital. So at the end of the day, if you want to know the book value or price per share, book value per share, which is telling you what the company is worth. This thing is just an indication of net worth. It's an indication of net worth per one share. And we'll tell us why it's important. So you take this total, divided by the number of shares in issue. At that point in time, it will give you who has calculated anyone for us or checked anyone. Just give us any random. So what was your shareholders' funds? As at what date? It was what? What was the shareholders' funds? Can you see it? Or total equity? Yes. Are you looking at the balance sheet? You see it somewhere there. It doesn't matter. Just pick. As you are picking this figure, pick the corresponding number of shares issued for that same period. That's what we need.
So total equity
was 73 billion.
No, 211 billion.
Okay. 211. 211 billion. Let's leave those other ones. Except if by the time you want to calculate, you write it down somewhere or something. How many shares did they have in issue? Google it now. Or just Google it. Number of shares issued by... Just Google it. Ask number of shares in issue by... is it Presco? If you have time and you are looking at their financials, you see it somewhere. But we don't have time to start digging all that. Okay. Who will tell you and Blessing that we are ready to chop? That thing is cold or that is warm. I don't know. Whatever the dynamics. You decide, sir. Have you seen something? Number of shares in issue. Yeah, exactly. Same thing. Is how much? 1 billion and what? Okay, so maybe it's a round figure. Free float. How much is free float? How many shares are free float? Leave that one, it's a subset. Free float is a subset. Let's work with total shares outstanding. 1 billion. So if this company, this is Presco, right? So if this is Presco, what is the book value of the shares of Presco? 211 billion divided by 1 billion shares. What's the price? 211 naira. That is their book value. Okay, check the stock market. What did they close? What did they close yesterday? Yeah? So we can see that. So we can see that this company is trading way 20. And we need to get matching figures. Sorry. I thought you were giving me matching figures. Because this 1,400 was looking. Eh? But can't you see their current equity? 2024. Yes. So the book value is 211, and the market is doing 1,480. Very possible. That is market perception now of where they think it can get to. But this is book. So if I'm going to buy, it's either I wait for it to come down as low as it can get. Because if I buy here, the risk I'm taking is if anything happens and it starts coming down, I will lose. But if we think that it will still do very well, the company will do very well, are they paying dividends? Have they been paying dividends? What's their dividend history? What's their dividend strategy and all those kind of things? Then maybe I might buy. But I might not buy with plenty of money. So you can do the same exercise for other shares that you want to buy. Or you can get an analyst to help you do that exercise. Or you can Google the thing. It might do the exercise for you. Okay, so Imo, Google book value per share of Presco. Let's see what it will throw out. Are we going to approach the ball? Okay, so we've done 1 hour plus. I think by now, Daddy might be here. Do I see any moment from now? And he will take us in the other session. But for now, if anybody has any questions, we can do it while winding out. Or we'll come and wrap up. I don't know if this has been of value to us.